In today's conversation, I interview Ben Turner, the president and CEO of Verituity. Verituity has raised $10 million, and they are helping to build a payments network, really a payment system, which we discuss in great detail. Ben has been in the game for 25 years as a technology founder and leader. We talked about how he saw the opportunity to build Verituity and how he has constructed the team and some of the management techniques that he has learned to be successful along the way. So I hope you enjoy this conversation with Ben Turner, CEO of Verituity. Hey, Ben, I'm excited to be chatting with you today. You run a really exciting business and you have an extensive career of being involved, running different projects, different companies. I'd love to hear from you to just kick off the conversation in your own words. How do you describe what Verituity is doing in the world?
Sure. I appreciate you taking the time to talk with us. So we're all about what we call first time and on time verified payouts and pay by anything experiences, where we connect the banks, payers, and payees to enable a seamless experience for payouts. So we've been very purposeful on the words we've chosen. So the reason we say first time in the world of payouts, the payout has to happen on the first time, or there's an economic cost to the business trying to make the payment, and there's a customer satisfaction or a payee satisfaction issue. So a good example is an insurance claim. When an insurance claim doesn't go through on the first attempt, the insurer has to pay additional fees to make it happen, but also the claimant it has a bad experience and isn't satisfied. We purposely chose the term on time because in the world of payouts, on time means it can mean now, it can mean 20 days from now, it can mean next week. It's what the payer and the payee have agreed to and when that payment should arrive. And then we talk about pay by anything, and we chose the words pay by anything because we fundamentally believe that payouts are too complex and they should be simplified. And it should be simplified to the point where all a payer has to say is how much, when, and to whom, and the intelligence of the network handles the rest. So this concept of rails starts to disappear, that it's really about who and how does the payer want to pay, and can the pay be paid on time?
Okay, I'm with you. I'm absorbing all that. Just to frame it out, the company is about 2 years old. Is that right? With about 40 people.
Yep.
Right. Is it venture funded? Have you guys raised money?
It is venture funded. We're backed by Forge Point Capital and Ardent Ventures. So we did our A round last March. And we like you said, we started the company 2 years ago, and we've made a ton of progress. We have two of the top 10 banks as our first two customers, and one of the world's largest insurance companies.
That's awesome. Yeah, especially for 2 years in business. Many people don't get past the prototyping phase. Then, what's this origin story of the business? Did you come on? Were you part of the founding team? I couldn't quite tell.
Yeah, I started the company. So I was the founder along with my partner, Chris Smith. And it was really simple. I grew up in the internet at a period where there were no robust payment gateways. So think back to the mid 90s, late 90s. There were no e-commerce platforms. There were no billing systems. And one of the things we learned very quickly is that if you wanted to have successful pay-ins or payments, purchases, you had to make sure you knew who you were doing business with. That was the simplest way to get rid of fraud. The other thing we learned is that taking friction out of the process, hiding complexity from the participants really matters. And so when I looked to start this company, that was one of the base premises is that in the world of payouts, that complexity is still there. Failure rates are still high because failures happen due to fraud, due to errors, and to missing data. So we had to solve for all of that.
And what were you doing prior to this?
So prior to this, I was actually in a whole different industry in supply chain analytics. So looking at the risk in supply chains, and then decided to go do this company.
Yeah. And I noticed it wasn't your first company that started with a Vera. You were also
No,
working at
that's true.
Verifone previously.
Verify, yeah, yeah. So
Yeah.
I got back in as part of the startup team at a company called Network Solutions, and then we got acquired by VeriSign. And again, the common theme there is it's all identity based. How do you understand that identity, and how do you enable them to do simple transactions?
Yeah. Yeah. No, I'm familiar with the company. It's straightforward model, but it's necessary and successful. um, you mentioned earlier on that, or a minute ago, that back in the day there were no payment gateways or e-commerce platforms. Where are we today? Where are we when you started this business? When you looked around and you said there is a gap in the market, what specifically got you excited?
Yeah, so what got me excited is unlike the world of pay-ins or e-commerce, right, where all these problems have been solved because when you go to buy something, right, in real time, there's a fraud check happening. You're completing and providing information so you can buy what you're trying to buy, whether it's on Amazon or whether it's on, like I just bought something off of a kayaking site. Those problems have been solved. But in the world of payouts, those problems haven't been solved because it's a different relationship. It's a business sending money to a payee, whether it's for an insurance claim, a game winning, a supplier receiving a payment. So when I looked at the market, there were these gaps that existed 20 years ago in e-commerce that needed to be solved. And on top of that, the ability to be able to choose how that payment should happen. So do I want to receive my claim payment via PayPal? Do I want to get it by check? Do I want to get it wired to me? Do I want to get it through Zelle? None of that is simple. And so the consumerization side of this hadn't happened either. And that's what looked appealing to me. And there's a lot of payouts. There's over 50 billion payouts in the US each year.
Yeah, this makes sense. So I'm picturing in the case of e-commerce, obviously Amazon, you're probably not going to be, they're not going to be a customer. You're not going to go to Amazon and say, hey, use our tool to facilitate payouts to your providers. But when you scale down the enterprise size, where do you see what's the early customer base for you guys?
I mean, actually very large enterprises. So some of the world's largest insurance companies are running on legacy systems that they need to modernize. And so we take a simple approach, right? It's kind of another key principle of our business, which is we shouldn't expect our customers to have to change the way they do business to be able to modernize their payouts. And so we call it, just send us your check file. We'll ingest it, we'll transform it, and we'll create a modern payment file and handle it from there.
What is a check file?
So think about if you're using an AP system or you have NetSuite or you're even using QuickBooks and you want to pay someone, you're producing a file that says print a check for this amount to this person and here's why. Mm-hmm. Well, that's a check file, and that's what most of the legacy systems are set up to do.
And how much of the what would you call this, like the payout market? What's the term for it when you're facilitating?
We call it payout or disbursements.
Payout market. Yeah, we'll call it payout market for now. How much of that is actually being done through check? Like how many businesses are receiving a piece of paper in the mail today?
Yeah, so in the US, about 40% of payouts or disbursements are by check still. Wow. So think about that. It's about $4 a check. And so what we can do is help a business quickly transition from check to digital and dramatically lower that cost structure and give the payee a choice of how they're going to receive that money, whether it's Zelle, PayPal, a wire, terms consumers don't care about, ACH, RTP. Yeah.
Why do you think that this legacy payment system of checks has been around for so long? Like 40% is shockingly large. I would have figured that, well, I don't know, whether it's Stripe or Bill.com or some other payment app out there, they would have effectively solved this. Or even thinking about the back-end services that these companies use, like QuickBooks, that QuickBooks would have just bolted on the option to just send payouts on different methods. Why is it still so high at 40%?
Yeah. Yeah, there's a couple of reasons. One is it's highly complex to do payments, right? And so the expectation up to this point has been businesses will figure it out. Well, they're going to figure out how to continue to send checks, right? They're not going to go spend $7 million or $5 million or $2 million to figure out how not to send checks. The second reason is there's missing data. So if you're receiving, let's say you're a supplier and you're receiving a payment. If you haven't told your customer what your bank account information is, all they know how to do is send a check. And then the third is the investment in the payable systems, the claim systems, are into the millions of dollars. So companies aren't in a hurry to reinvest and change that. And so that's why we look at the world and says, just send us to your file how you have it today, and we'll modernize that for you.
And would you say that, I mean, how do I ask this question? The incentive structure here seems to be entirely on the payee side, right? The payer doesn't, I mean, the $4 for a check, but they're not hugely motivated. I mean, the downside of checks are what? Is that some get lost in the mail. There's a cost that's much higher than electronic transactions to receive, to send and to receive it. To just put it in the mail, someone has to get it. They have to take a phone and scan it or bring it to a bank or however they process it. So there's human cost there, and there's mistakes that are along the way. Are there other incentives that push the payee market here to adopt electronic transactions in some way?
Yeah, I mean, think about your everyday experiences with e-commerce, right? You're used to buying things, not using checks. The same is true when you want to receive a payment, right? So whether it's an insurance claim, whether it's you just won you gambled and you won some winnings, or whether you're a supplier and you're receiving payment for a service you delivered, the expectation is just like the experiences you have in e-commerce, you can choose how you're going to receive those funds. And that drives up payee satisfaction. It also does another thing for the payee, which it allows them to know when they're going to get paid. Right? So having that visibility really matters to both the payee and the payer.
Yeah. I mean, I would have thought unless there was some sort of technological or regulatory blocker that this back-end payment problem, or really it's not even a problem, it's just a lack of evolution. Checks work. They're not an overt problem. They're more like, hey, in the year 2022, they now are a undervalued or a less ideal, less optimal way of facilitating payments. I would have thought that this would have just the pressure economically on e-commerce brands or insurance companies, like you say, the pressure on them would have been so high that they want to remain competitive for the suppliers in the space. And so if I'm a supplier deciding where to sell into, I would have thought that the payment method would have been a factor, and that, it's like, yes, I'm surprised it's not.
Yes and no, right? But so you think about, let's take the B2B example, the supplier to business, right? The supplier is happy to close you as a customer, right? That's their priority. Now they got to get paid. Well, that's not the first discussion you're having when you make the sale, right? When you think about the insurance company you're selecting that insurance company because they're giving you the coverage at the price that you're after, not, you haven't thought about how am I going to get a claim paid?
That's true.
Right. So
then I'm like, well, why would it? And then it's like, why would it ever improve? The other thing, let me ask you this, is there any subtle incentive for the payer? Like if I'm paying by check, I assume that I have the power to, what would you call it? Like veto that check until the check's been delivered. Like I could, what do they call it? Void a check. I never use checks.
You can call it back, stop it, right?
Yeah.
But you have to solve for that problem when you help a company modernize their payouts, right? So our platform has the intelligence built into it that says deliver this payment on this date, regardless of the payment rail. So even if the payer wants to pay using ACH, they can initiate that payout today and say, pay it in 20 days. And our platform has the intelligence to know, hold that until day 20, but along the way, make sure we're verifying who the payer is, making sure we're verifying, or who the payee is, make sure we're verifying the payee's account, make sure that it's not a duplicate payment. Make sure all those things that have to happen to have a successful payout are in place so that on day 20, it goes through.
All right. So then operationally, you're receiving, so say the case of QuickBooks, you're receiving, Verituity is receiving the, would you call it a check order from QuickBooks?
Yeah, it's called a payment file, a payment instruction.
File, right.
Yeah. So we would receive a payment instruction from, it could be a NetSuite, it could be a homegrown system that runs off a mainframe. It could be something from QuickBooks. It could be from their bank's treasury platform. We'll receive that payment instruction, however they produce it, and then based on the terms that the payer wants and based on the amount and who the payee is, our network handles the rest.
Gotcha. And so when the payor will set up the integration of Verituity, they would be entering in like an API to their bank account, so Verituity can withdraw money from their bank, or is that the right way?
Right. So they're called funding accounts, right? So payers have funding or deposit accounts with their bank, and we're pulling the money from that to be able to pay the payee. So the money flow goes from the payer's bank account, deposit account, to the payee's bank account or checking account.
Got it. Seems pretty straightforward. Why now? I mean, we kind of touched on that earlier, but for you specifically, did you feel, even coming from an industry, maybe adjacent, where I'm sure you kind of ran into these types of things, but you weren't specifically laser focused in payments, did you feel that this point in time, like, when people start companies, they generally feel like some edge, whether it's like, I have a network of people that I know and I can quickly tap into, or I see a problem that other people don't see because of where I'm sitting or my, professional experience, or they're just passionate about something. Was it you? Was it a partner of yours? Like, what was the sort of the spark in early lighter fluid that got the business going?
Yeah, there are a couple of things. One is, in the supply chain world, one of the biggest challenges in the buyer-supplier relationship has been payments. And it's two parts. It's how do you verify that you're paying the right business, the right payee, and how do you make sure that that's happened in a timely manner and that you have the visibility that you can settle that account then, or it's called reconcile that account. The other thing that, as I was looking around, that motivated me on this is the technology is finally there where you can literally remove all the complexity and allow our platform to handle that for the payer and the payee, which is how the world should work. Like, one of the biggest lessons I got was from the CEO at Network Solutions, where he used to say, why as techies do we expect our customers to figure out any complexity? Our job is to make complexity disappear. And the technology was finally there where that could happen, between machine learning, between microservices, between modern software languages, between the cloud. It was just all there, so the time was right. And then I got a little lucky where I had a friend of mine who early on in my company called me up. He was at IBM and said, hey, we have a very large banking customer who has this problem with payouts. Can you guys solve it? And we could.
Yeah, that's awesome to hear, because it is daunting often. Well, really, the daunting part in starting companies is, number one, being really sure that the problem you're solving exists and that your solution can fit into that. Like, that we're articulating the problem correctly and that we're offering a experience that our potential customers can integrate with. They can like fit into that, whether it's, a simple sign up flow online, or whether it's like, hey, schedule a call with your whole exec team, or whatever needs to happen on the customer side. How was the beginning? I mean, what were the last couple of years like? You guys have grown quickly. You have 40 people in 2 years is pretty quick growth. Did you pivot the company at all? Have things been pretty straightforward since early on? Any notable bumps in the road or learnings?
Well, there's always bumps in the roads, right? I mean, it's impossible to do a startup and not have bumps in the road. But I think a couple of things have been really helpful that I believe you should try to do in any business you start. Before we really got started, we went out and talked to customers, potential customers, to learn from them that did we have that pain point right, or those pain points right, and were we talking about it correctly? And that was hugely valuable. We talked to over 15 banks and over a half dozen payers before we even got started, just to make sure we understood it correctly. And so that took a lot of the friction you would run into, the bumps you would run into out early, because we had a solid understanding of the market. The second thing is I focused on pulling together people that I've worked with in the past to help start the company. Right? There's nothing like having a team that's been together, helping launch a company, because you know how each other works. You have a level of trust and openness that makes it possible. And so we've kind of carried on that tradition. Our developers have recruited their friends into the company. Our salespeople have recruited their friends into the company. We have very few people where we've gone outside. And when we have, I've used a trusted recruiter to go find those people, because it's really about, I look at building companies like putting together a sports team. You have to get the right players on the field in the right position, put together the framework of how you're going to play, and then let everybody play the way they like to play. And that's how you can build a winning team.
Yeah. Who were some of the other folks that you had on? Was that from the last business that you were working on? Were you working
from Network Solutions and VeriSign, brought in people. One of my partners brought in people from another bank he was at. We had developers come from Fiserv that worked together. So really focused on creating a company and creating a culture where people want to come work and want to help each other.
Yeah. I'm curious to ask you about the supply chain. Obviously, 2022, recording May, the supply chain has been in the news more than I ever remember in my lifetime. Most people don't think about the supply chain. They don't know what's going on behind the scenes after they walk into a store or buy something online. But due to the ripple effects, seemingly, of COVID and the lockdowns and the impacts economically and socially of that, we're in a state where it takes me 8 months to receive a couch. And and I'm curious, have you seen changes behind the scenes that indicate a story different than what's being publicized? Because as I understand it, it's just some kind of complex coordination problem and backlog from sales cycles. How do you describe where we are today as far as supply chains?
Yeah, I mean, supply chains are tough in the best of times, right? Because you have multiple tiers. So your sofa has multiple tiers of suppliers that are providing components, and then a manufacturer putting it together, who's then paying another company to get it delivered to a retail store, right? So that's a complex set of actions in the best of times. And then you throw in a pandemic, well, parts start to break. So all of a sudden, there's no stuffing available for the cushions on the sofa because that supplier had to go offline for 8 months. And it's a lot like in the world of payouts, where the lack of visibility becomes a liability. And that's really what happened in the supply chain world. There was a lack of visibility of what the raw materials, what the components, how much inventory was available to finish your product. And that's caused the situation. I mean, I needed to get a new kayak, and it's going to take normally what I could have in 2 weeks. I'm not going to have it now for 2 months.
And is that now the case because of some ripple effect? I mean, most countries, as far as I understand, in the US, we're, for all intents and purposes, out of the pandemic. I don't know that any cities have any current lockdowns, and maybe some, but it's pretty trivial at this point. Is there a like what goes on with these, whether they're suppliers or transportation? Is there a just massive backlog and that's what we're dealing with, and it kind of will sort of ripple out as you see it?
Yeah. I mean, eventually we'll get back to what we're used to, but it takes time to make stuff.
Yeah.
Right? It takes time to get raw materials. So that just, it's a time problem.
Do you think one of the topics that I've heard articulated, which is kind of interesting, is this balance between efficiency and robustability, or would you call it like robustness in the supply chain? So the efficiency, if you optimize for efficiency, everyone is specialized all across the world, and there's a complex network of transportation that all comes together in this perfect synchronous orchestra. The downside of that, of course, is when you throw something off, like if one person's playing off beat or you stop for a second, it just ruins everything. Then the robustness would be locally made, locally manufactured, locally produced, locally sold goods and services. Things might cost more. They might maybe even take more time to manufacture, but they're far less likely to be disrupted. Have you seen this? Number one, am I articulating the spectrum? Does the spectrum make sense? And is this something that's being brought up inside of companies or countries?
Yeah, I mean, the challenge, so build locally can mean a lot of things. It can mean inside a country, inside the US, or it can really mean local, right, in Portland. And so it's a lot like the world of payments, right? So there are a variety of payment rails, and the complexity of each of those rails is different. So there's not one single rail today that meets the payment needs of all of a payer across the board. The same is true in the world of when you think about supply chains. If you're going to go locally, you have to have everything there, and that in most cases isn't true for more, complex products. A complex product is putting together a sofa, right? If you were to buy your sofa manufactured locally in Portland, they would still have to import the stuffing. They'd still have to import the screws. Even if they made the screws in Portland, they'd have to import the raw material to produce the screws. So you can't truly do everything locally. So you're still going to have this ripple effect. It's the same thing in payments. One rail today doesn't really meet all the business needs of the payers or the payees. So you end up with this wide range of rails. If you want to get paid today, you can use RTP, real-time payments. You can use ACH. You can use Wire, Zelle, PayPal. They're all different. They're all complex. They're all different choices. But today, you have to make those choices, where we believe that, going back to your supply chain example, you should make all that complexity disappear and just get the end product.
Right. Yeah. Yeah. So you're almost painting a picture of the parallel between the payment industry and the supply chain industry by saying there's there's an efficient way to do it, and then there's a robust way to do it. And those would be on the same spectrum, opposite ends. So the efficient way would be everything is very specialized all across the world, manufactured there and shipped where it needs to be exactly on time. That comes with the downside that is not robust, made locally. But to your point, you can't ever reach parity, unless you're
right.
Like a garden would be 100% robust, right? Unless you can take away the sun and the water and the soil, I can grow, eat, make and eat my own goods. And that might be one of the few examples where you can actually produce 100% locally. The homesteader movement, which surprisingly more people have gotten into. It seems like more people after the pandemic are of this mindset. They're of the mindset of this spectrum, and they're like, we need to be more robust and not reliant on other places for food and supplies and everything else.
Yeah, I think that's very true. I mean, it's an interesting movement, right? So people are more self-sufficient around how do they entertain themselves, right? How do they make sure they have the right foods that they enjoy? How do they make sure that they don't have to worry about that sofa not showing up for 3 months?
Yeah. And I think the world of crypto happening at the same time reinforces this. I don't want to call it an ideology. It's really like a mode of thinking or a mental model for whether or not, in the case of currency and money, whether it's centralized, the benefits of centralized control and the ability of the government and the Federal Reserve to change or manipulate the currency supply. And then, of course, on the completely decentralized end, people own their own currency, they own their own wallets, and things move around freely. I think that
Think about
I want.
think about that though. So going back to what we were just talking about,
Mhm.
in the world of decentralized finance, right? Who's going to own the risk? Right? It's the same thing in the supply chain. Who's going to own the risk and manage the risk? And that's the challenge, right? Crypto is a great way to pay people. It's a great way for you and I to buy something, right? But what it does is it presents risk then to the business who's receiving that payment. Or if you decide to get your insurance claim via crypto, you're now assuming risk on how that's going to convert to the cash that the guy that's going to replace the roof on your house will take. And so it's about managing that risk. And it's hard for people to effectively manage a wide spectrum of risk. So that's why, us as technologists have to be able to hide that complexity and make it easy for the participants to understand, but also have the visibility so they know what's happening. You're right. Crypto's a great example.
When you say risk there,
that's why not to go back to kind of what we talked about earlier, but the reason I like the term on time for everything we just talked about, whether it's supply chain, whether it's payouts, whether it's crypto, is the expectation you have of when you should receive that crypto payment or the conversion to dollars has to be met. That's on time. That your expectation of when you should receive that SOFA has to be met. That's on time, right?
And when you say
that's the paradigm.
Yeah. So and the risk is that because the reality is they just don't solve for it, right? Like it takes me longer to get it. People's payouts take 30 days or 45 or 60 days. It's like it's a frustration, and it's like, well, you have this ideal where it's actually, I saw this is a funny tangent, but I saw this great comedian who the name is escaping me now. He's an Indian American guy. But anyways, he was talking about, his joke was around Amazon. And he's like, we got Amazon Prime and they're going to ship your stuff to your house in 3 days. And then we got Amazon Prime Now that's going to ship your stuff to your house in 2 hours. And then soon enough, they're going to have like Amazon Prime Now where they ship it to you as soon as you think of it. And it's already at your doorstep. And it's like, that's the optimal on time, which of course, when you play it out is ridiculous because it's like, as soon as you think of something, there it is. But in the case of payments, as soon as the payer agrees to pay you, it would make sense that is the time at which you receive payments. Like that's standard in at worst case scenario in the crypto world, you wait 10 minutes for miners to clear something.
Right. But during that 10 minutes, you should have an expectation already set. What's going to be that value when you get that crypto?
Yeah.
Right. Visibility matters.
Do you view it as a risk of transaction, like that the transaction wouldn't go through, or that the currency conversion would be different than what the pay? Is that kind of what you're thinking when you say risk of crypto? Well, you could pay stable coins.
Exactly. That's and that takes some of that risk off the table. But now you need to know who you're receiving it and who's being paid. So the payer now assumes risk. If you take the conversion off the table, the payer has risk. Is that person I'm paying, or is that business who they say they are? Are they transacting in a sanctioned country? There's all these things that you have to be able to provide visibility to, and that's one of the key things our platform does is make sure that visibility is there, so that you minimize the risk, you increase the likelihood of a successful transaction, and it gets done on time.
Yeah, yeah. What do you think about paying with stablecoins? Does that, because I could picture a back end system that exists that facilitates payments between payers and recipients built on crypto by
Yep.
default. And then you think, okay, everything else is an afterthought or everything else is an option, but there's some, maybe it's like a decreased transaction cost or some other incentive to have people move onto crypto rails. Is that something you guys have talked about?
Yeah, so we're going to roll out Pay by Crypto later this summer. And the way we're approaching it is the payee can decide that I want to be paid in crypto. So they carry that risk of the conversion, but they've made an informed decision, right? And then we'll verify we'll verify the payee, we'll verify the wallet, we'll verify the transaction, we'll provide the visibility to both the payer and the payee until it's settled. And that's really how we think, whether it's stablecoin, whether it's Bitcoin, whatever the crypto is, that's how it should work. And obviously in stablecoin, you don't have the conversion issue as much.
And sorry if this is repeating something you had described, but is the money flow from the payer to Verituity to the supplier? So the payer, in this case, when you roll this out, they wouldn't necessarily need to have made any crypto transactions. This would just be, they pay you in a check or however they want to pay you, and then you pay the recipient in a stablecoin.
Yeah, so the payer doesn't have to do anything in crypto. Matter of fact, they can have never done a crypto transaction in their life. And what happens is that conversion will take place through our platform. So then the payee can receive the payment in, Bitcoin or stablecoin. Mm-hmm. And what we do, what we focus on is making the data flow that makes the money flow. So we'll talk to the payer's bank and say, withdraw this amount of money, right? We'll talk to the wallet and the exchange that's doing the conversion on the crypto and say, deposit this amount of Bitcoin in this person's wallet.
Mm-hmm. Mm-hmm. That makes sense. Did you back when you were previous to this, back before 2020, and you were at Meta Group? I believe it's called Meta.
Meta Group, yeah.
Meta Group. My understanding is you would do, it was a consulting business where you would help large businesses or businesses of different sizes come up with strategic plans for their supply chain. Maybe other things outside.
I was at Interos doing supply chain, but I started a company called the Meta Group, a decade ago, and it was really a place for myself and my partners to figure out, what new markets are interesting. And we did that by helping larger companies launch products, predominantly in the cyber and identity space.
Wow, that's exciting. Can you talk about any of those or even the process of how you would go about approaching a large company? And it seems kind of a daunting initiative.
Yeah, it's interesting. Every company, can use help when it comes to how do you enter a new market. And just so happens our focus is on the product side. And, the same process I used here, we called it market sensing then. Get out and talk to buyers and users, understand where their pain points are, where the gaps are, and then figure out how do you have a technology solution that solves that. And so we did that for, very large software companies, for very large telcos, for companies that were trying to, large consulting firms that were trying to roll software product versus just services.
So you'd reach out, set up a meeting, ask them what their problems are effectively, and then would you go out?
That's what happened.
And would you go out and find a solution for them, basically, or would you try to build something for them?
It just depended, right? So sometimes it would be go find a solution and help them figure out how they buy it and bolt it into their stack. Other times it'd be build that solution.
Interesting. Do you feel that the bolting on of the technology or building, that the whole process was, I mean, did you go in thinking that you could, just cruise through it? Or I imagine selling into any large company is very, very difficult. Was it harder or easier than you thought it was?
I mean, I knew it'd be hard, right? So
Yeah.
selling into large enterprises is I've done that for a long time, and we kind of take a unique approach to it, and that's what we use here at Verituity. We call it left to right selling. So if you understand who the buyer is, and you understand all the influencers and who the operators are, and understand that you have to sell all of them to successfully sell a large enterprise, then you can be successful. And that's kind of one of the core tenets that we use here.
And the left to right implies, what's the left to right?
So the left is the buyer.
Okay.
And the far right is the C-suite influencers. And there's a spectrum all through there of operators and influencers that you have to get on board. Because, as you know, in large enterprises, buying's more of a committee decision than an individual decision.
Yeah, that's very true. Where do you think startups mess this up? Because a lot of startups will have the goal of selling enterprise software or some services or something. And I imagine it's going to be cold emails until that doesn't work, maybe a conference or maybe some warm intro to somebody in the company. And then they throw it up to somebody who actually can take the conversation, and then they stumble. And I would imagine, speaking from experience, most startups waste half the time. Like they take twice as long as they probably could have for someone who experienced. What are some of the low hanging fruit mistakes that a less experienced founder would make in this process?
Like one of the biggest mistakes I see consistently is not taking the time to map out that left to right, so you know who you have to talk to. And then the second is understanding how you're going to discover what their real pain point is. So mapping that out, pre-planning. And then kind of the third thing that I've done consistently is if you build the right network of advisors who have relationship with your buyers, then you can get into these large accounts. And that gives you some credibility because I worked with Anthony, I'm calling him up and saying, hey, I'm working with this company. They have really interesting technology. All of a sudden now as a startup, I have a little bit of credibility going into that call with Anthony. Where if I tried to cold call into Anthony, I have no credibility. Probably wouldn't even take my call. So I think those three things are what I've seen consistently in startups that have a hard time selling into enterprises that they don't do.
Yeah. Yeah. Advisors I've started 3 companies, and I can't, one company, we got some help from an advisor. I shouldn't say that. Maybe we got decent amount of help from a couple of advisors, but I hear almost advisors tend to be, they tend to be hit or miss in my experience. They're either quite useful or they're not useful at all. Sometimes you can have an advisor on the board or in the company, not necessarily on the board, that is a namesake. You have a big name investor or a big name head of some large company that's advisor in the company, and that can help just by validating the business.
Yep.
How do you think about building an advisory board or using an advisory board? It seems to be one of the most underutilized areas in startups.
Yep.
And I'm curious what your experience is.
Yeah. So first of all, you have to have a plan of how you're going to use them, and then you have to actually invest time into making them work for you. And so what I've done, and I'll use this current company, Verituity, as an example. We've created 3 different advisory groups. We have an advisory group around cybersecurity where they meet monthly, and we walk them through what we're doing to protect our assets, the data, the network, etc. And so we're engaging them to get active feedback. And what that does for us is it gives us credibility with our customers because we have large company CISOs involved. But it also gives us the operating oversight that we need. The second is our go-to-market, right? And that's really what we just talked about is how do you have advisors be effective in a go-to-market scenario is you have to treat them like they're part of your sales team. But their job is helping you start the sales process to help you get the top of that funnel started So, I'll tell you what we do. We do a weekly call with all of our go-to-market advisors, go through the accounts they're working, help them figure out how they have a conversation. And, they don't just get, options. They actually can earn a commission for helping us close a deal. And so you have to engage the go-to-market advisors just like you would any other go-to-market function in your company. And then the third is, the product advisory. Again, it's the onus of the company to capture their knowledge. So, we have a product advisory group where we're able to get, we meet with them on a regular basis to capture what they think the future trends in the market are. Not what today is. They're not going to help us with today product things, but where do they think the market's going to be in 12 months and why? And so, I love advisors but they're only good if you're willing to invest the time. And if you invest the time, you can get outsized results from them.
And where do you, I love that framework, by the way, having the product, the security, and the like sales or marketing departments or board, advisor boards. You clearly consciously thought about this. It wasn't like a friend of yours said, hey, can I advise you in the business? Are you structuring these as these are part-time, a couple hours a week, paid in equity and maybe some compensation, generally vested schedule? Advisors, in my experience, are like a tenth of a point to maybe 1 point of equity range. And if you get 2, 3 together, they also benefit from knowing each other. Yep. Are you largely composing these groups of people that you personally know? Or is there any service or place that you found that's effective in finding people? I'm speaking on behalf of, say, other startup.
I think to build a good advisory group, you have to use your own network and people you trust, their networks, because it's really easy to get someone to say yes to be an advisor, and they get some options and they don't do anything. So the relationship matters. Every advisor we have, either I have worked with them or known them in the past, or someone on my team has, or in one case, our investor knows the person. And we've been very, very purposeful in how we've put together the group of advisors that we've had, and they've been very effective. Matter of fact, we have one advisor going with us to a trade show because they're well known in the industry, and have helped us set up meetings.
Where are you guys going?
So there's an insurtech trade show coming up, or insurance trade show coming up.
Nice. So the idea to talk to insurance companies and integrate with their system so that they can pay out payees better.
Yep. And they can really lower their cost structure, dramatically lower their risk. The interesting thing about payouts failures can range from the high single digits way up to north of 40%. And it's because, unlike e-commerce, you have errors, you have data gaps, and you have fraud. And so by solving those, or by mitigating those for payers, we're able to dramatically lower the failures and lower the cost.
Is that speaking specifically for checks?
It's across the board, right? So, even in a fully already digital payout, take gaming, it's not unusual to see high failure rates because they have bad data from the payment account didn't get verified, or the payment file has an error in it and it can't process through ACH, or it can't process on PayPal because the payout's for $60,000 and PayPal only will do 50. So it's that evolution that happened in e-commerce, decades ago, hasn't happened in payouts yet. And that's what we solve.
How do you think about, I know you had the initial jump in the jump start in the banking connection. How do you think about now, like insurance to me feels, I understand insurance. It's not intuitive to me how it's necessarily your first or, an important vertical. How have you segmented out the different types of customers really customer categories that make sense. And I'm curious if you have a framework that could apply to other businesses as well.
Yeah, so for our business, what makes sense is we look to sell directly to payers that have more than 1 million payouts a year. So that's everything from insurers to large general contractors to gaming companies. Below that, we look for channels that are aggregating north of 1 million payouts a year through multiple payers. So things like payment processors. And then when we look at banks, we're looking for banks that have large commercial businesses, that their treasury services and their treasury deposit accounts are a big part of their business model.
Gotcha. And banks, insurance companies make the most sense. Is it because of the volume or the complexity or just the lack of innovation?
The volume and complexity is a big deal. So even, if we go back to what we talked about, where in the world of pay by anything, the payer and the payee really shouldn't have to figure out payment rails, right? And we've grown up and created this world where everybody has to know what the heck ACH is, or why should I do RTP instead of wire, right? That's too much complexity. So how do you unify that for a large payer? Well, that's hard for banks to do. So we come in and we provide that orchestration layer that unifies all that and provide the intelligence so that the payer doesn't have to make so many decisions. They just have to say, this is how we want to do business, and we apply those policies. Same thing's true when we sell directly to a payer. The complexity of that is high. So we remove all that complexity.
Interesting. It does seem to make a lot of sense for larger, more complex businesses, given that you're removing the complexity of it. What other businesses or companies have you learned from over your career? Any specifics that come to mind in terms of what has been not necessarily a model, but an example of the type of company when you think about either culture, product, branding, anything else? For me, the modeling or learning about other founders and other companies is, incredibly helpful. Any specifically that you've learned from?
Yeah. And so, before I jump into that, we have three key tenets we built our culture around. And I learned those from looking at different companies. But the first tenet is what we call perfect information. So what that is we widely and encourage sharing information. We try not to have any silos of information. The reason for that is it allows people to do their jobs effectively, but it also helps drive innovation, right? If you have knowledge, you can figure out innovative ways to solve challenges. The second is, it's kind of a popular term now, first principle thinking. And again, the reason I like that and the reason that's an important tenet for our culture is we're about how do you solve complex problems in an innovative way, and how do you change the way the world of payouts work. And so that means if we have to have rules to help people operate, we don't have people that are thinking and making good decisions, right? We want to have a company where people have that freedom to make good decisions. So we don't have rules. We don't have a vacation policy. We don't have a come to the office policy. We don't have a sick day policy, as simple examples. We expect and fortunate to have a team that makes the right decisions. So you don't have to have that, but that allows real innovation to happen. And then the third is a real focus on execution, right? I mean, as you know from your background, a big part of successful startups are, can you just execute? And can you effectively execute at a high rate of speed? And so we spend a lot of time making sure we're good at executing. And so companies, I've looked at is if you go back and you look at some of the early days of Apple, right? One of the interesting things to me was that focus on crisp quality execution, down to the motherboard, right? Well, that worked for them because Jobs understood what the buyer was after, right? Hiding that complexity, but making it a pretty product.
Yeah.
Network Solutions was hugely influential for me because the CEO there really spent a lot of time on talking about in helping us understand how do you focus on the right things. But really, it's our job to make complexity disappear as technologists, right? If we make something complex, that's not the right thing. And then, I'm kind of a big history guy. So believe it or not, I like, Ben Franklin's, the businesses he started had a huge influence. And part of that goes back to that perfect information and first principle thinking is he always had an open mind and believed anything was possible, right? And that's a core tenet of trying to do something as a startup.
Do you recall what businesses Ben Franklin? I vaguely know his life story, but I'm curious if anything. I love talking to history buffs.
Yeah. Think about the fireplace, right? So he realized there was a problem with fireplaces aren't heating homes; they're pushing heat up, right? So he reinvented how a fireplace should work so that the heat got pushed out into the house.
What did it look like before? Did they not have chimneys?
No, there were chimneys, but all the heat went up the chimneys. So he basically did like a cut-in that pushed the heat out.
Oh, interesting. Huh. Yeah, man, it feels like a whole different, like the kind of, it's never one person individually that's brilliant. It's usually a circle of people and a culture that bring out the best in people. And I wonder what it was about that time period or those folks that seem to, create like just the founding fathers of this country that wrote the Constitution, Declaration of Independence, like the amount of, it's like the amount of collective understanding of the social psychology that they must have had blows my mind. I mean, to think about, like, one of the things that struck me was realizing that state capitals are located in rarely are they located in the most populous city in that state, because they recognize the effects of consolidation of power and how they wanted to preserve the balance of having the political power be away from the dense population of the city. And I was like, when I heard that, I was like, they must have taken the same level of thought and applied that to every part of the structure, right? And that I was just blown away when I heard that.
Yeah. So, I mean, one of the big lessons for people that want to start a company or startups in general is they created the time to think things through, do the planning, and then act, right? And that makes a huge difference. If you just act, you're going to miss. If you're thoughtful.
Yeah, I totally agree. I'm curious to ask you, Ben, do you write? I've heard a number of people more recently now advocate for the benefits of journaling or free writing, where you're just writing whatever you're thinking for 10 minutes or so. Has writing been a part of your thinking practice?
Yeah, I have 3, white notebooks that when I think of, I just write down thoughts, right? I don't form them into anything you would ever publish, but it's a way to help me clarify my thinking and, help me think through how could this work? How should this work? Why does it work this way? It should work that way.
Yeah. Awesome, man. Are you writing publicly online now? Are you writing anything that is available, or are you tweeting any personal social handles you want to throw out there?
No, not yet. But now that things aren't as crazy as the first 2 years, stay tuned is what I would say.
Cool.
As you know, the first 2 years you're pretty heads down.
Yeah, that's for sure. Otherwise, you don't make it. We'll include all the links to Verituity, and congrats on all the progress so far. It seems like things are going really well, and I really enjoyed our time together, getting to know you and learning from your management styles and everything else. I appreciate it.
Yeah, I really appreciate you taking the time. Thank you.
Cheers, Ben. Bye.
Cheers.